Good evening to everyone. So all of you are welcome to the course Financial Statement Analysis offered by the Department of Accounting, which is specially designed for the students from the Bsc degree in finance based on their demands and requests. Due to the prevailing condition, so as of now, we don't have any other alternative other than conducting lectures online, even though personally I don't like it. So maybe sometime you guys are all right with the online discussion, because online teaching is all right. But what we do is conduct the mode of conducting lectures through Zoom, and these online platforms are not really online teaching or any interactive teaching. But for the time being, we don't have any other options other than doing it. Sometimes maybe today the UGC chairman made an announcement saying that universities can be reopened. If that's the case, we will conduct physical lectures. Let me explain the basic outline of this particular course and introduction part within an hour or so. After that, we will decide whether the other parts of the content of the subject will be discussed today. Normally, we have weekly lecture of a 3 hour covering 45 hours. This course, so as in any other course units, has its own learning outcomes. You can leisurely read all those things. I'm not going to read out one by one. Basically, our scope is straightforward and could be identified easily. In simple terms, what we are going to talk about is a straightforward something. So that's about financial statements, and we are going to analyze them for some purposes. Therefore, we need to know about the financial statements. Already you have learned its content, but in this particular course, your learning outcomes have been designed in such a manner to bring about something new and more from the general financial information provided in the financial statements. For instance, when we take the profit or loss statement, everyone knows that the details, so it is not that detailed, but in a bridge summarized version of things are there, but it gives you, it tells you whether the entity has generated a profit or a loss. So likewise, when we read out financial statements, you will get some information. Of course, that those things also will have to be understood from a very broader perspective. But this particular course tries to make use such information from a different perspective to come out and show the decision makers or the investors or whoever wants to use this information about entities to take some further decisions about investments and lending, financing, which cannot be simply grasped or taken by looking at the given numbers in the financial statements. Numbers are going to be rearranged, analyzed, interpreted sometimes. So those interpret like additional non-financial information is also being used for this particular purpose. So based on that, all these learning outcomes have been mentioned. Then assessment criteria. Of course, even last time your assessment was, it's a kind of alternative assessment. It was not traditional summative end semester examination that you used to facing during the degree program like in other courses. So this time that is called alternative examination in lieu of physical examination. So we had some constraints, limitations, whereby we happen to limit it to 2 hours. Even the testing areas are also limited. But here these assessment criteria are given to you on the assumption that we are going to cover it unless some unexpected obstacles would stop us or just constrain us. In case there will be some, if there will be some constraints, like maybe another round of spreading pandemic or any other issues, of course, we will then let you know how the assessment criteria be adjusted. As of now, we have intended to allocate 70% for the end semester examination, that is paper-based. We will see physically or virtual. So we intend to have a quiz. As of now, it has been indicated like towards the end. We will discuss whether we will be offering this somewhere the mid of the course, and a group assignment as well. Group presentation, we would like, of course, we can change it. Like if you take the maximum number as 4, that may not be practical since you guys have, altogether more than 150 students. I think this has to be increased up to 10, I suppose. Anyway, some other guidelines are also there. Later we can talk about what we expect from you. Basically, this group assignment is based on financial statements, that is annual report. So if you can access to financial statements of any other company, that would be all right. But it is easy to obtain an annual report of a public limited liability company. Then you have to do a detailed analysis and make a presentation plus a small or write-up. The coverage should be industry analysis, environmental influences, analysis of business operations, accounting analysis, cash flow analysis, analysis of profitability, analysis of liquidity, solvency, credit analysis, and risk likewise. So you have to think of where you can use whatever you learn during throughout this particular course. So since we expect to cover all those areas, it's not possible and practical for you to do the presentation or finish the group assignment somewhere before the course. So it should be towards the end of the course. So I'll quickly talk about the overview of the firm. Before that, I will introduce myself and the other lecturer, the resource person of this course. I'm Anil Jayantha Fernando, lecturer attached to the Department of Accounting. You may have seen me maybe in the common program or maybe in the university. I'm not sure. Sometime you may have seen me. I'm a fellow member of the Chartered Institute of CA Sri Lanka and the CMA Sri Lanka as well, from my professional background. In addition, I engage in some social activities which have some kind of political engagement as well. It's not some petty party politics, but from societal point of view, with a view to form a better society for everyone to live in harmony. I engage and take part in many activities. Sometimes you may have seen me. Whereby my main contribution not in academic, but in this political and social activities. My main contribution is about economic policies, where I work to and contribute to the economic policy making committee of the National Intellectuals Organization as well. And you mainly, so I am the coordinator of this course, and mainly the lectures will be conducted by Mr. Ruchira Palliaguruge. On and off, I will join and just take part some sessions, but mainly most of the contents would be discussed by Mr. Ruchira Palliaguruge. Ruchira Palliaguruge is a well-known lecturer and again practitioner. He has lots of experience compared to one who has only the academic background, because he has the practical exposure as well, working at a different organization, and now he works to, I mean, Ruchira will introduce himself further and give more details where he works to. He's also a fellow member of CMA Sri Lanka as well, and he holds some positions there in the council. I think he is a council member as well. He holds some position. Yeah, Ruchira. So yeah, even now, Ruchira, if you want, I think you can introduce more detail later. Okay.
Yeah. Yes. Sir. Yes.
Yeah.
Okay.
Yeah. Feel free to interact with the students later on, and you can download the course outline where some additional information is also given. Apart from all those things, I would like to request you to actively participate in the teaching learning process, despite the fact that there are limitations, especially when we have online lecturing. Don't worry, but if we would like if you can interact in that way. Therefore, feel free to ask questions, even question ourselves or clarify things. Better not to believe simply in what we say, because the purpose of a university student or the learning should be to inquire the world and not to simply believe in things. Unfortunately, there are divisions about the purpose of education. Why do you want to learn? Why do you want to have knowledge? Lots of debates are there. Dominant, the market-based argument which propagated especially and started in 1960s, 70s, and even now, that is being dragged together with the neoliberal economic policies, that we need to learn to do jobs or to earn some money, to be employed, something like. That is one ideology which comes from the domain called indoctrination. So indoctrination domain argues that universities or educational institutions, learning institutions should train people to have some competencies to engage in employment and work. Therefore, what you are supposed to do is to follow instructions, just obey the rules and procedures and do your work. So that is what we call indoctrination. Indoctrinations may be required at some places, but I do not believe in that. I take the other side, that is the enlightenment purpose. In my perspective is the purpose of education is not to be indoctrinated or not to be trained as a follower or some supporter. Instead, the purpose of the education should be to inquire the world, question the world, visualize the world. So then only you would be able to enlighten. So while you are enlightening, of course, you will have enormous opportunities of doing jobs. It doesn't mean that once you become enlightened with knowledge, which is adequate to question everything, you will not have employment opportunities. So it's not. So if you're learning in that way, actually your competencies should be further broadened, and whereby you would be able to achieve both. You can contribute to the economy, meantime you can be a great citizen and a great human. So that is the purpose, general purpose of education. But this is only one aspect of that education process. We are the tiny part of the education process. Therefore, we look at financial statements and analyze. So there are lots of technical things, but even these technical things, it is good if you can discuss from practical point of view, interrogatory point of view, questioning modes. So therefore, this alignment approach can be included there. Overview. Whose financial statements are going to be analyzed? So already you have heard about financial statements. Actually, we analyze financial statements of entities. There are different types of entities, sole proprietor, partnerships, and likewise limited liability companies, association, unit trusts, likewise. But compared to sole proprietorships, partnerships, when we take limited liability companies and trusts or any other body corporate, there is a huge risk where an agency is created. A tiny group or handful of people will be given or empowered with lots of power and resources to engage in something on behalf of others. When we take a limited liability company, when it goes up to public, national, international, ultranational, cartel, trust. So nowadays you can learn lots of things about these companies, how these companies have behaved in pursuit of hiding the wealth of crooks, which have been revealed by Pandora Papers. So all those entities, persons are legal persons, either limited liability company or a trust. So therefore, our unit of analysis is an entity. What kind of entity? A legal person, limited liability company. So which has a broad scope and a responsibility towards the society. So that is the reason why we need to do this particular analysis from a very comprehensive way to look at different aspects, not only one or two aspects which are seen on the face of the financial statements. We need to dig into that and check whether the profitability is all right, sustainable, comes from that source, this source, the company can maintain adequate liquidity, whether efficiency levels have been maintained, whether assets have been safeguarded, protected by the agents, that is managers and directors on behalf of the owners and on behalf of the society. Likewise, so they may be linked to others. So better read something about legal person, the limited liability company. Another characteristic of this legal person is, even though that is a legal person, it has enormous capacity, power to do many things. In the world, actually, the most powerful weapon is not any other lethal weapons, it's a limited liability company. The reason is it has enormous power. It could be exercised for an infinite time period, but on the other hand, there is no physical substance. Therefore, it is an imagined reality. Imagine reality. You don't see it. You see the other people's resources who are just surrounded by that particular entity. However, since that is an imagined reality, there is no physical existence. There should be some physically existent realities have to run it. That is why we need to have managers to run the business. Because the entity, no matter how powerful it is, it cannot run and activate by itself. So managers are therefore key. They become agents. So these aspects are important for us. Owners, on the other hand, provide capital to run the business, and we entrust our capital with managers, whereby we appoint a board of directors as well to look into the matters, to oversee what the managers are doing. In the meantime, in the course of businesses, when it goes, or maybe due to different demands and requirements. So from time to time, entities like the persons may have different needs. As a result, they may not be able to tie up all the investments or their own money, own resources in the business all the time. Instead, they prefer to get kind of leverage support from outsiders. From where you can get the support is where that is from lending institutions, bankers, financial institutions likewise. So therefore, bankers and financial institutions are there to provide a kind of leverage for entities, private, public, and all. So from that sense, actually borrowing is not a bad thing. Borrowing can be used to increase the value of a firm, but it's something like a double-edged sword. It's very critical. If you borrow and waste it, you are in real problematic situation. Borrowing has to be very carefully used, and you should know when to borrow, how much to borrow, from what source to borrow, and when it should be redeemed likewise. So pretty much you guys are from the Department of Finance, so your area is finance, your specialization is also finance. Then if you do not manage finance properly, of course it incurs huge cost to you at the expense of others. That is not expected to prevail in an organization. That is where we need finance expertise. Lenders, I hope you have yeah, you are in the second year, but you must have already taken some finance courses. Have you guys learned about the Miller and Modigliani theory about the capital structure? Have you heard about? If not learned?
Yes, sir.
Okay, great. Have you learned or just heard?
In second semester, third year, first
maybe
semester,
one,
first semester.
yeah, maybe if you have just
Third
taken,
year,
yeah, finance
corporate
course,
finance,
yeah,
corporate.
corporate finance. Miller and Modigliani's theory is important, like for our purpose. So it is not that like we are not going to test you on that, but mind that. So they came out with very important finding about this capital structure. So capital structure can really create value to the firm. In our financial statement analysis, through gearing ratios or debt to equity, different types names are being used. That area also will be tested. Apart from the quality of your operations, nature of businesses that you do, business opportunities that you had, and the market share that you had, all those things. So if you take your business or the quality of businesses, apart from the quality of businesses, your profitability, that is the profitability on shareholders, can be increased by borrowing. The impact of leverage that can be analyzed. Then employees to carry out operations. Managers are also employees, but since other employees do not have access to all the information about an entity, we have this separation. Do not know whether it is fair or not, you may ask. No matter whether manager or maybe a floor worker, janitor, or a clerk, all are employees, but all do not have the access to information. So then inside an organization, information asymmetry exists. Keep that in mind. Not the information asymmetry between outsiders and internal parties, managers and directors. Even within the organization, employees, ordinary employees, will not have access to critical and price sensitive information. Then the the stakeholder engagement also matters. Over time, when we take a firm or business entity, conservative approach, traditional approach is that, okay, you do your money, you invest, you do the business, so therefore don't think of any other aspect, right? So like it is your money, you do the business. your prime objective is to maximize your profit. So that is what you learn in finance, right? Objective of a firm is to maximize the wealth. In accounting, we call profit. From finance term or the value creation, we say maximize the wealth. Can you do that? It's impossible, right? So it's a myth. You can't maximize because maximization does not have an upper limit. But anyway, we are in a race of maximizing. Sometimes we disregard the other aspects, the surrounding, other stakeholders. Therefore, even though we learn in in theory that the prime objective of a firm is to maximize wealth, it could be questioned, it could be challenged. It has been already challenged. It is being debated. As a result of this never-ending debate, however, have extended the scope of accounting and finance, not limited to the shareholders. So therefore, when managers carry out their tasks, so operations and other parties engage with the operations, and you are not supposed to simply think of only the closed or so closely associated parties. You need to think of other parties as well. Even nowadays, customers, we do not care, right? So in Sri Lankan context, sometimes you may see these controversies. So any adulterated food can be sold, toxic food can be sold, even authorities give the permission. So likewise, many controversies are there. But nevertheless, in other countries, especially the societies where we claim that they are developed, of course, now you can't do the things as you wish, right? On your own way, simply disregarding other things. You need to be like concerned about other aspects. You need to take care of customers, suppliers, other aspects, employees, even environment, society. So everything has to be taken into account. That's the reason why throughout the world nowadays there is a huge debate is there on the climate change issues where corporations are accountable to great extent to um, expand this particular issue. Um, Again, you also have a responsibility to take some remedial actions. So then, even though we are not going to test all those things, the financial statement analysis, so the analysis would reveal certain things, and the outcome of this analysis are connected with the stakeholders, and therefore stakeholders are interested to know about what this particular entity has been doing in terms of managing its assets and generating profits and dealing with financing. Already, as I just explained you, there is a conflict of interest. So managers are not supposed to invest money in the business, but they have enormous power and the wealth to run the business. Since we live in a society which promotes and encourages us to maximize your own utility, might think that, hey, what is the reason for me to maximize the value for shareholders or to take care of other stakeholders, environment, society, and all these things? Why shouldn't I think of maximizing my own profit? This conflict is seen, but we try to bring some mechanism. So what you learn in corporate governance is a kind of remedy to mitigate these conflicts which prevail in an entity. That is the reason why we need to have governance. So this is the basic structure. What I explained can be shown in this particular diagram. So bottom here is the firm. We are going to analyze the financial statement of this particular firm. These financial statements are directly or indirectly have been influenced by all the other people, which are not seen to us in the numbers, but you must be aware that. So that is the governance structure. The management is there. Management is just overseen by the board of directors. Board of directors is appointed by the shareholders, and the shareholders also appoint an independent party called auditors to give them an independent opinion about the financial statements. So external auditors. So then in addition to the external auditing, these firms are required to comply with different regulatory requirements given in the Companies Act and maybe in other acts. Now there is new act has come that is called amendment to the existing Securities and Exchange Commission Act. There are lots of debates about this. You can read it. So likewise, some additional component will also be there, but I have just put there are only selected components. Then we will look at a little bit about the business operations. No matter what the type of the entity that you talk about, whether it is manufacturing, whether it is trading, whether it is providing services, whether it is a small, big, medium-sized, national, international, whether it is not-for-profit organization, charity. So if you take any type of entity, those entities we also may have so many activities, operations, millions of operations. However, everything can be grouped or categorized into three major baskets or the categories. They are financing, investing, and operating. No matter whether the entity is a profit motive or not, you need to have money. Without money, you can't run an entity. Therefore, you need to obtain finance. How does an entity interact with the providers of finance should be explained. How much money has been taken from owners? What is the interaction between owners and the entity? And what is the interaction between the entity and the lenders? So that area, the subject of these financing activities. Investing activities have to be carefully understood. Since you are in the finance, the course, even layman or the ordinary person. So this particular word has or lead to a misleading conclusion. When we hear the word investing, what is an investment? Actually, investment is misinterpreted. I saw in one news article and one TV debate as well, some ministers are saying that when the opposition and other parties, social activities and political groups accuse that nowadays it is a fact that most of the state properties are being sold to foreigners. And recently 40% of that Yugadana LNG power plant was sold to an overseas company in, as I remember, American company. Then when this debate was going on, some ministers, so many, so attached to the conversation, no, it is not a sale, no, we are not selling our property, it is an investment. So investment is a word, it could be misinterpreted. Is that true? Is that an investment? What do you think? If you sell part of your company to someone else, is that an investment? Yeah, what's your response? Again, you are confused, right? It has a partial truth. It has a partial truth. There is an investment, but not for us. If you sell something, you in cash, you get money back, you can invest that money somewhere else. Of course, that is an investment for the company who bought 40% stake of this entity. It is not your investment. It is an investment of the company who bought it. So therefore, if someone comes and just bluntly says that, yes, it is an investment, it is a misleading truth. So later on, yeah, I told you that it is an investment. Yeah, that is not our investment. That is the investment of the other parties. So got to be very careful. Investment is generally, you know that, I need not to explain. It could be any activity where your resources, which could be measured in terms of money or not, as long as it could be quantified. You sacrifice of resources as of now with an expectation, not real, we do not know. Investment, you sacrifice resources with an expectation of gaining more than that. So that is an investment. Even your time sacrifice for today's course, it is an investment. You expect something to enhance your knowledge, your competencies. But from these courses or unit or our discussion, if you do not get anything, so nothing would be improved. So that investment is useless, something like that. So that is how you can think. So investment is being used in day-to-day language and operation. But when it comes to an entity, when it comes to financial statement analysis, investing activities and investments are not simple financing activities of just depositing your money somewhere else, buying shares or buying or invest some money in treasury bills. So they are really financing, not investing for an entity, because you relinquish your ability to control such resources to someone else. Suppose that a big company, say John Keel's Holding, had 100 million rupees. This 100 million can be simply deposited in treasury bills. For a layman, it is an investment. Had you had 100 million the same way, when you invested that 100 million in treasury bill, yeah, that is your investment. But that is why you have to understand and distinguish this separately. Entity invest that 100 million in treasury bills, it is not an investment. Why I am saying? Because John Keels is not there to do these kind of things. So that would be an investment for a finance company, because the ordinary course of the business of finance company is to look for opportunities in the financial markets and invest. So their products, their key operations is that. If there is an entity which engages in manufacturing, providing services, retailing, imports, whatever, trading activities, their investment should be to facilitate those activities. For example, manufacturing entity, if you buy a land and put up a factory, that is an investment. Buy a land, put up a factory, then you buy machines, investing activity. Equipment, likewise. So now you can think, I just gave you some hint. Even though you have a very effective financing mixture and appropriate investments, it both do not guarantee that you will create value. You need to put them into operations. Operationalization is the final key of creating value. Others would help, but without having operationalization, no profit, no value is created. So that is where you look at these operating activities. That is the reason why cash flows are divided into these three major subgroups: operating activities, investing, and financing activities. Interconnection is seen between these things. And now you can see the connection between these three activities with providers of finance. Who are they? The shareholders, your owners, and debt holders. You give finance, and the managers and directors take them and slice them into different activities, layer them into different activities, and operationalize. If results are there, benefits are there, that would be given back to the lenders, unless the entity has an objective of further reinvesting likewise. So it's a kind of loop, cycle, and interaction and interconnections. Already you have learned. Just keep this thing in mind. These are the things that we are going to take out from our analysis. So these are the financial statement that we are going to talk about, since you guys have already learned. And again, from then and there, when Ruchira sir would take you through these calculations and analysis, always these statements are referred to you. So I need not to explain these things one by one. So I would like to talk a little bit, maybe 5-10 minutes time, and something which is outside from the analysis that comes from the financial statements. So from the financial statements, we take numbers and sometimes we reformat as we, based on certain requirements and do certain calculations and tell what is the situation. So in a way, what we call interpretation is there. This interpretation can be further enhanced and improved at the time of taking the final decision, where you need to do some other analysis, what we call business and environmental analysis, where you need to know about the company's product, the types of products. So what kind of threats are exposed to these products, and how the technology threatens you, how best the management is developing its products, how best they are channeled to markets. So likewise, there are so many things, unlike in the past. Big companies were famous just because of producing one or two products, unique products, single products, several products in mass scales. So nowadays, things have changed. It's very hard for us to find an entity which produces only a single product because it's highly risky. So now companies expand and diversify products quickly to great extent just because of the invention of technology. Technology alters. Therefore, we need to understand. Some of the products just appear, last for a while, and disappear. In the meantime, not because of only the technology, but because of the consumer's behavior, demand, new knowledge, issues, the demand also change. Price elasticity, what you have learned in economics, also matters when it comes to demand. And availability of substitutes. There are some products, there are no substitutes. Then of course, demand is there. Even manufacturers can create oligarchies or monopolies and control the price, like in the case of rice, though we have some substitutes. So we do not have, when it comes to energy, we have very rare substitutes. Then the producers have more power. Brand names, it's a bit controversial. In the past, even now, of course, you can argue that brand name has some kind of value, but that is being challenged nowadays. Unless that particular brand does not create any quality or value addition to the consumers, just not for the prestige purposes or for the name's sake. What matters is the functionality, functions of the product, features of the product, quality of the product, and not the name. But it's sometimes, you know, that due to emotional attachment, we may feel like, okay, this brand and all this, still brands have some bearings in the markets. Patent protections, it's another game in the business world. Some take patents, some cannot take patents. Patent taking process, it's also pain-taking process. As a result, some people give up the patent. So good example nowadays, people talk about these nano nitrogen, some fertilizer. One of Sri Lankan professor, actually, she is from our university, Professor Nilwala. She was the one who took these patents. But later on, maybe there were no adequate government supports and all those things. I'm not sure whether she sold these patents or whether she has all these patents, but there were no any commercial productions. But at this particular decisive juncture, now government is importing nano fertilizer. It's in a way kind of situation you should be ridiculed. About the patent of vaccination, nowadays, if you are interested in, just read. World Health Organization and some people talk about the importance of vaccination for this COVID pandemic. The dominant argument that, so this is a social issue. It's not an individual issue. If single person's health is not protected, others are unsafe. So therefore, the patent for manufacturing vaccine should not be given to private companies. Private companies can take any other patents, but better not the patents for vaccination. But unfortunately, now companies have grasped it and obtained these patents. They are in a huge competition, race of manufacturing, and that has led to a new concept called vaccine nationalism throughout the world. And you need to know about the technology. You know that technology is absolutely enhancing, developing, increasing. It doesn't mean that every country should embrace the newest technology. Every company should embrace the newest technology because it's impossible. So what matters and what's going to be successful is how best you match. Therefore, you better check whether these companies, so what, I mean, in what industry is it operating, what technology is being used, what technology would threaten them. So likewise, you have to assess. If they are not in the proper line, not aligned with the appropriate technology, there is a huge risk. Then I would look at the knowledge base of the firm. Sometimes, even though now we talk about this, very difficult for us to assess or analyze when determining numbers, because it is connected to the knowledge. Some knowledge are embedded in the entity. If you take your individual case, you also have some tacit knowledge that cannot be explained, that cannot be expressed, that cannot be documented. Only thing what you can do, you can exercise that knowledge. You use it whenever you want it. So likewise, entities also have developed some kind of knowledge over time, what we call learning over the time. So that is a kind of tacit knowledge. But mind that that is the reason why some entities are more powerful and at a competitive edge over the others, maybe because of this. So where you see those who do pretty well in the industry or in the competitions have a significant research and development arm. Because research and development, at the time of spending money for research and development, it is a cost. So you cannot increase your profit. So some managers do not like it. But if you look at from the sustainable point of view, long term, the point of view, actually research and development really matters. So managers, talents, know-how, and all those things are also important in the analysis, learning patterns. Then the industry competition, in a way, as the market economy suggests, and as we see in some industries you do not see competition, purely monopolies and oligarchies. But when the competition exists, one of the dominant argument about the competition is that if you promote the competition, it would create an opportunity for entities to manufacture goods at the most lowest cost, at the highest efficiency level. So that is the reason why they promote it. And that is what it is. It was explained in the economics under a perfectly competitive market. The equilibrium price in a perfectly competitive market is the most efficient price in this world. In theory only, right? When it comes to practice, you don't see it where monopolies and oligarchies determine the price. They make the price. So nevertheless, you will have to assess your competitive advantage also sometimes, where you need to take into account your size, entry barriers, nature of your competitors, product, and substitutes, and so many things, rivalry among the firms, industry position, technology likewise. And opposite to this competition, new concept has also been developed and nowadays through global supply chains and other connections, corporations are trying to work together, what we call cohabitations. On the one hand, you compete each other, but not to cannibalize each other, to destroy each other, but to create more value in such a manner where by cooperating each other. So this cannot be done with a fierce competition or antagonistic approaches. It has to be done with harmony by sharing information only through sharing technology. Therefore, sometimes to analyze these competitiveness, we can use Porter's five forces model or any other models likewise. So in a way, simply no matter how it is going to be analyzed and understood, it's a fact that your position, it is good if you can assess your position. Then in the analysis process, it is good to know about how best your entity, your company has been complying with legal, social, and other environmental requirements. So nowadays, no room is left for us to maximize the profit at your own wish. You need to comply with all these things. You need to think of the sustainability. That is why we have lots of rules and regulations and governance structures. If you do not comply with these things, you deviate this, somewhere down the line, you may pay a big price. As of now, it would be all right. But from sustainability point of view, then you are in a big risk. Then based on that, we can ask key questions like this. Does the firm have competitive advantages? How durable is the firm's competitive advantage? What forces are in play to promote the competition? And what protection does the firm have from competitors? So whether there are any cohabitative approaches or not, likewise. So I would like to quickly mention about the new trends of business models and the world order nowadays. No matter where we are, what we talk about, what we do, and how greedy we are and all those things, the world is, in a way, there are discourses. One area is the tendency for green technology and energy conservation together with the climate change issues. That is a new topic. I don't know up to what extent we are talking about the need for green technology and energy conservation. Ethics, governance, and sustainability are key pillars in successes and not the short-term profit-making aspects. So in order to achieve this thing, what matters is you need to maintain the integrity through transparency and accountability. People should be held accountable for the actions. So a good example is Sri Lanka. You can do any nasty, you can engage in any nasty actions, so and enjoy your life because you are not accountable. So then such a society will not be good for the mankind. Then the connecting operations through supply chain. So unlike in the past, so now you can't claim that, okay, I produce my goods and I don't have any connection with others. No. So due to the global nature, globalization, and the sustainability, cost of production, efficiency, and new developments, all those things, it is always good to connect through supply chains. So that's what we see. Then the economic integration versus disintegration. So disintegrated, scattered operation will also create values, but it is not the optimal, not the best. Best way of creating value is through the economic integration and not through disintegration. Therefore, against the competition, over the competition now, cohabitation is being discussed and promoted. And finally, people over profits. Profit is not the number one, though we claim and we learn in management. It doesn't mean that we should not earn profit. Yes, profit is a must. Profit is a value creation. In other words, it has to be earned in a way which does not distract the other or the social orders, distract the environment, or create inequalities and social disorders. So that is the meaning. So at the expense of people or the mankind, human, if you look for profits, that is so dangerous. So they are the new things that we have to discuss and take into account when you look at operation of a company. So the impact of those things, when we bring them into the analysis of final decision making, can be discussed. but throughout our course, if you take individual items, it would not be that easy. But it is better for you guys to keep those things in mind, because the learning is, as I just told you, it is a process of enlightenment, gaining and improving your competencies to question the world, inquire the world. So with that, I will stop my introduction, and we'll see whether Ruchira sir is in a position to continue today, or otherwise you can discuss with students and decide what to do, and just give me the
Right.
permission to leave. Yeah, please. Yeah.
Yes.
Do you have
So
any?
thank you, sir. Now, as you have mentioned that in my presentation also, I have a presentation.
Right.
So I was hoping that I could discuss certain things with regard to the environmental analysis, which you have covered briefly in your presentation.
Right.
If we have time, we can maybe
Yeah, we have
quickly go through
actually.
that presentation.
Yeah, Ruchira sir, so this is planned for 5:30 to 8:30, but today, like it's not possible to have online lecture for 3 hours. It is not good for your health and everyone else. If you want to teach alone, better to have breaks, maybe 1 hour 45 minutes. So it is dangerous and boring for students as well. So better need not, like, so we have 3 hours time, no matter, even if you can finish it 1 hour, 1.5 hours, 2 hours, that would be all right. So let me okay, this recording I'll just stop.